How newsletter businesses beat YouTube on revenue per fan. Most summaries skip the operating details. On Money Machines we map how newsletter businesses actually make money, what it costs to run, where margins get squeezed, and whether the hype matches reality. Illustrative estimates only, not financial, legal, tax, or investment advice. A newsletter business sells attention and trust to a defined audience, usually through free growth content and paid subscriptions, sponsorships, or product upsells. Unlike YouTube, you own the email list, which changes retention economics and reduces platform algorithm risk. Publicly reported examples like Substack's top writers show wide income dispersion. A small cohort earns substantial revenue while most newsletters remain small. There are 3 common newsletter archetypes: free-only growth newsletters monetized through sponsors, paid subscription newsletters on platforms like Substack or Behave, and hybrid models with a free tier plus paid depth. Each has different churn, growth, and sales cycle dynamics. A finance newsletter read by high-income professionals commands different sponsorship rates than a general lifestyle list. List ownership is the strategic advantage over YouTube. When a platform changes algorithms, your distribution doesn't disappear overnight. But email has its own deliverability risk. Spam filters, inbox competition, and list fatigue are real. Operators commonly estimate open rates of 30 to 50% for strong niche lists, but that declines as lists age without re-engagement. Beginners often confuse audience size with business quality. A list of 5,000 engaged readers in a specific profession can outperform 50,000 generic subscribers for sponsorship and product conversion. Niche depth beats broad reach for newsletter economics. Before evaluating income potential, identify who pays, for what outcome, and why they choose this provider over alternatives. Primary revenue lines include paid subscriptions, sponsorship placements, affiliate recommendations, consulting upsells, and digital products. Commonly estimated ranges for niche paid newsletters run from a few hundred to several $1,000s monthly at modest list sizes. Top operators are outliers. Revenue per subscriber often beats ad-supported video because email readers convert at higher intent. Sponsorship CPMs depend heavily on audience profession and purchasing power, not raw subscriber count. Paid subscription pricing typically clusters between $5 and $15 monthly for individual creators, with annual plans offered at a discount. Illustrative example: 1,000 paid subscribers at $8 monthly equals $8,000 gross, before platform fees, refunds, and churn. Churn of 5 to 10% monthly is commonly estimated for consumer newsletters. B2B niches often perform better. Sponsorship pricing is usually quoted as CPM, cost per thousand opens or clicks. Commonly estimated ranges for B2B and finance newsletters run from $25 to $100 or more per thousand opens, depending on audience quality. A newsletter with 10,000 opens per issue and a $50 CPM might earn $500 per sponsor slot, but selling sponsors requires outreach and relationships, not passive inbound. Affiliate revenue works when recommendations match reader trust. One well-placed tool or course recommendation can outperform dozens of low-trust links. Product upsells, templates, consulting, cohorts, often become the highest margin line once trust is established, but only after the free newsletter proves value over months, not weeks. Compared to YouTube, newsletters can monetize a smaller audience more intensely. A channel with 50,000 monthly views at a $4 RPM might earn $200 from ads. A newsletter with 5,000 engaged readers and a hybrid monetization stack can commonly estimated exceed that, but only with consistent publishing and a clear value proposition. Compare gross revenue to net cash flow. They are not the same. Startup cost range: Illustrative $500 to $5,000 to launch, mostly time-driven. Startup costs are relatively low: email platform fees, domain, design, and writer time. Typical range: $500 to $5,000 to launch seriously, depending on whether you outsource design or ads. Ongoing costs include ESP fees scaling with list size, payment processing, promotion, and substantial writing or editing labor. Margins can look excellent on paper because there is no COGS, but owner writing time is often undercounted. Illustrative example, 10 hours weekly at a $50 implied hourly rate adds $2,000 monthly in hidden labor. Margin pressure, high gross margin, labor intensive, churn erodes LTV. Owner labor is frequently the largest hidden cost, value your time at a realistic hourly rate. Beehive, Substack, ConvertKit, and similar platforms charge based on list size. Illustrative ranges, free tiers up to a few thousand subscribers, then $50 to several $100 monthly as lists scale. Payment processing adds roughly 3% on transactions. These are visible costs, the hidden cost is writing, editing, and research time every week. Growth spending is optional but common. Cross-promotions with other newsletters, paid ads to a landing page, and lead magnets all cost money or time. Commonly estimated customer acquisition cost for a free subscriber ranges from $1 to $10 depending on niche and channel. Paid subscriber acquisition costs more. If you spend $5 to acquire a subscriber who never converts to paid, that's a direct loss. Illustrative monthly operating picture for a growing newsletter, platform fees $100, tools and design $50, promotion $200, and 20 hours of owner writing at a $50 implied rate equals $1,000 in labor. Gross revenue might be $2,000, net looks thin when labor is counted honestly. Break-even for paid newsletters often takes 6 to 18 months of consistent publishing. Operators who quit at month 3 because growth is linear, not exponential, rarely reach profitability. Plan for a long ramp and treat early issues as audience research, not failed products. Operators fail by picking overcrowded topics, underestimating consistency requirements, and expecting paid conversion without a strong free value ladder. Newsletter hype ignores list churn, spam folder deliverability, and the difficulty of standing out when everyone launched a Substack in the same niche. Key failure points: weak niche, inconsistent publishing, no free-to-paid ladder, overestimated conversion. Hype content optimizes for clicks, operators optimize for contribution margin and cash runway. The most common beginner mistake is choosing a topic they want to write about rather than one where readers have purchasing power and a clear problem. Weekly reflections is hard to monetize. Actionable analysis for commercial real estate investors is easier, if you can deliver. Operators also fail by skipping the free-to-paid ladder. Launching a paid newsletter on day 1 with no proof or audience is a cold start problem. The typical path: free newsletter builds trust, paid tier offers depth or exclusivity, sponsors arrive after consistent open rates. Deliverability damage is underdiscussed. Buying email lists, aggressive sign-up tactics, or high bounce rates can hurt sender reputation. Recovery takes months. Never purchase lists, build organically. For beginners, this model fits writers who can publish weekly for a year without immediate payoff. It does not fit people seeking passive income in 90 days. Skills needed: writing, niche expertise, basic marketing, and patience. Capital requirement is low, time requirement is high. Verdict on newsletter businesses: good for strong writers with domain expertise, poor for pure arbitrage plays. Startup cost: low scalability, medium automation, low risk, medium beginner, good for. Writer's verdict: strong if you can write consistently. Do the spreadsheet for your market. Run a small test before scaling. If you already have domain expertise and enjoy writing, newsletters offer one of the best audience-owned models in creator economics. If you hate writing or need fast cash flow, look elsewhere. Test with a free newsletter for 90 days. Track open rates, reply rates, and whether anyone asks for more depth. That signal is worth more than any projected revenue calculator. Subscribe to Money Machines for more hype versus reality breakdowns. Educational content only. Illustrative estimates. Not financial, legal, tax, or investment advice.